Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of corporate finance and find out if companies are really as shiny as they seem or if there is something else going on today. We're diving deep into WD-40 company's proxy statement for their 2025 annual meeting. Get ready, because we might just find out if their business is as smooth as their products. Before we jump into all the juicy details, if you appreciate getting straight insights from these important corporate documents and want to know what is really happening behind all the corporate jargon, make sure you are subscribed. We also have a Discord community linked in the description below. It is a great place to connect with fellow corporate enthusiasts and share your thoughts. So what this filing is all about is WD-40 company telling its shareholders what is on the agenda for their upcoming annual meeting and giving them details about the company's leadership and how they're being paid. Think of it as a yearly checkup report for the company's health and how the folks in charge are performing. The big date for shareholders is the 12th of December 2025. It is an online meeting, which is pretty common these days. They're going to vote on electing directors, which is kind of like voting for the board of a school. They're also having an advisory vote on executive compensation, which basically means shareholders get to say if they think the top folks are earning their pay. And finally, they will ratify the appointment of their auditors, PricewaterhouseCoopers LLP, for the year 2026. Now, for those of you who aren't super familiar with how these things work, you are getting these materials because you own shares in the company. You can vote in a few ways online, by mail, by phone, or by attending the virtual meeting. Let's talk about the people who are running the show, or at least trying to. They are proposing 9 people to serve on the board of directors. Most of them, 8 out of 9, are considered independent. This is generally a good thing because independent directors are supposed to look out for all shareholders, not just the management. The only one who isn't independent is Stephen A. Brass, who is the CEO and president. That makes sense as he is the top executive. Mr. Brass has been with the company for a long time, since 1991. He has worked his way up through different roles, showing a lot of experience within the company itself. This long tenure can be a double-edged sword. On one hand, he knows the company inside and out. On the other hand, sometimes a fresh perspective from outside is needed. Cynthia B. Burks is an independent director and brings a lot of human resources experience. She has a background in talent management, compensation strategy, and building company culture. This is super important because happy employees often lead to a healthy company. She also serves on other company boards, which means she has experience overseeing multiple businesses. Daniel T. Carter is an independent director and is a financial expert, a certified public accountant. He's been CFO for a few companies and started his career as an auditor. Having someone with deep financial knowledge on the board is crucial, especially for keeping an eye on the numbers. He is also recognized as an audit committee financial expert. Eric P. Etchart is the chairman of the board and is also independent. He has vast international finance and management experience. Being a global company, having someone with that kind of worldly experience is a big plus. He is also on the board of other companies like Graco Inc. and Alamo Group Inc. Lara L. Lee is another independent director focused on governance, consulting, and advisory services. She has worked in retail, innovation, and has international experience with companies like Harley, Davidson, and Lowe's. Her experience in market development and innovation could be key for WD-40's future. Edward Omeji Jr. is independent and brings a lot of operational and manufacturing experience from companies like Fender and Harley Davidson. He is also a decorated combat veteran, which adds a unique perspective on leadership and discipline. He has experience in supply chain and logistics too, which are critical for any company that makes and sells products. Graciela I. Monteagudo is independent and has a strong background in consumer goods and retail, with experience in both Latin America and the US. Having this international consumer insight is valuable for a company like WD-40. She's also on the board of ACCO Brands Corporation. David B. Pendervis is independent and brings legal and corporate governance expertise. He served as Chief Administrative Officer and General Counsel for ResMed, a medical device company. His legal background means he will be a strong voice in making sure the company follows all the rules and avoids risky situations. Angie Saunders is independent and has a lot of experience in leadership roles for consumer brands like FTD Companies and Redbox. She also spent many years at Starbucks. Her expertise in marketing and e-commerce is very relevant in today's market. The overarching theme here is a board with a good mix of experience. You have financial expertise, operational knowledge, consumer market understanding, and strong governance backgrounds. The company is clearly trying to ensure it has a well-rounded group overseeing its operations. Now, let's talk about the money. This is the say on pay vote. It is non-binding, so shareholders get to give their opinion on how much the top executives are getting paid. The company says that shareholders have been pretty happy with executive pay historically, with an average of 98% approval over the years. This indicates that management usually aligns pay with performance pretty well. This is pretty straightforward. The audit committee is recommending PwC PricewaterhouseCoopers LLP as the company's auditor for fiscal year 2026. This is like getting a professional opinion on the company's financial health. It is important that this auditor is truly independent and does a thorough job. Let's look at who owns a big chunk of the company. BlackRock Inc. holds about 15.52% and Vanguard Group Inc. holds about 12.01%. These are huge investment companies that manage money for many people. It is good that large, reputable institutions are invested in WD-40. Now let's see how much the insiders, the directors and officers, own. Stephen A. Brass, the CEO, owns a decent amount of shares, which is a positive sign as it shows he has skin in the game. The other directors and officers also own shares, some of them quite a bit, especially considering their salaries. This alignment of ownership with management is a good sign for shareholders, as it means their interests are probably aligned. The company emphasizes its commitment to good corporate governance. They have an annual election of directors, an independent chairman, and committees made up of independent directors. They even have an overboarding policy that limits directors from serving on too many boards, which helps them focus their attention. And importantly, they prohibit hedging and pledging of company stock by executives and directors, which is a good practice to prevent risky financial maneuvers. The company's board structure separates the CEO from the board chair role, with an independent director serving as the chairman. This is a common governance practice to ensure objective leadership. They also detail how the different board committees oversee various risks, from financial reporting and cybersecurity to environmental, social, and governance issues. Having these specific committees focus on different risk areas helps ensure that nothing important slips through the cracks. Non-employee directors receive a base annual fee of $75,000 with additional compensation for committee chairs and members. They also receive restricted stock units, or RSUs, valued at about $110,000 annually. This mix of cash and stock is designed to attract skilled individuals and tie their compensation to the company's performance. This committee is responsible for setting compensation for the top executives. They review the company's compensation programs and strategies, and they set performance goals for the CEO. They also look at human capital and talent management. This is the group really in charge of making sure executives are paid fairly and are motivated to perform well. Here's where we get into the nitty-gritty of how the top executives are paid. For fiscal year 2025, the named executive officers, or NEOs, were Stephen A. Brass, the CEO, Sarah K. Heiser, the CFO, Jeffrey G. Lindemann, the Chief People Officer, William B. Noble, Group Managing Director, and Patricia Q. Olson, Division President, Americas. Their compensation is made up of three main parts: base salary, annual cash and equity incentives, and long-term equity incentives. The annual incentives are tied to yearly performance, while long-term incentives have a 3-year horizon. This structure generally ensures that a good chunk of their pay is directly linked to how well the company performs, especially in terms of financial results and total shareholder return. The company uses a growth reward program, or GRP, for annual cash incentives, and performance stock units, or SUS, and restricted stock units, or SUS, for long-term equity incentives. They also use market share units, or MSUs, for long-term performance. The idea is to reward both short-term company goals and long-term growth. For the GRP, they measure performance based on things like adjusted net sales and adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization. This is a standard way to measure profitability. They also look at strategic performance measures. It is good they are looking at sales and profitability together, as you need sales to make a profit. In October 2024, the company made its compensation decisions for fiscal year 2025. Base salaries saw increases ranging from 3 to 10%. They also granted SUS and other long-term stock-based awards like RSUs and MSUs. These equity awards are meant to encourage executives to stay with the company and work towards long-term goals. This table tells us how much each of the top executives actually earned over the last 3 fiscal years. For fiscal year 2025, Stephen A. Brass, the CEO, earned a total of $4,266,899. This includes his salary, stock awards, incentive compensation, and other benefits. This number looks quite high, but let's see how it compares to the company's performance. Sarah K. Heiser, the CFO, earned $1,369,964 in 2025. Jeffrey G. Lindemann, Chief People Officer, earned $1,476. William B., Noble Group Managing Director, earned $975,266, and Patricia Q. Olson, Division President, Americas, earned $1,205,475. Now, here is the really interesting part for us investors. Let's look at the pay versus performance table to see how their pay stacks up against the company's results. In fiscal year 2025, the CEO's compensation actually paid was around $1.48 million. For the other executives, the average was around $656,000. Now let's compare this to the company's performance. Their net income was close to $91 million in 2025, which is up from previous years like $66 million in 2023. Global adjusted EBITDA was around $108 million in 2025, which is also up. Looking at shareholder returns, WD-40's total shareholder return was about 114% in 2025, meaning if you invested $100, it would be worth about $114 by the end of the year. The peer group return was about 151%. So, while the company's stock did well, it did not outperform its peers. This is a nuance to consider when looking at executive pay. While the company's profits and stock price are growing, they are not outperforming their competition in terms of shareholder returns. This could be an area for the compensation committee to scrutinize further. This table shows the actual equity awards granted to the executives. For the CEO, Stephen A. Brass, the MSU Awards, which are tied to performance, had a maximum payout value of over $3.5 million. So, a significant portion of their potential compensation is tied to future performance, which is good. As of the 31st of August 2025, the executives still had a lot of unvested equity awards. For the CEO, the market value of these unvested shares was over $2.1 million. This is good for retention as it incentivizes them to stay with the company to get these awards. Just a quick look at the auditor fees for 2025. The company paid PwC about $2.3 million in fees, which includes audit fees, tax fees, and other related services. This is a significant amount, but it is standard for a company of this size. The audit committee approves all these services to ensure the auditor remains independent. The audit committee is responsible for overseeing the company's financial reporting, internal controls, and the work of the independent auditor. They have reviewed the financial statements and met with both management and the auditor. They've also discussed the auditor's independence. This is a critical function for ensuring the integrity of the company's financial information. So, what is the big picture here? WD-40 company has a seasoned board with diverse expertise, making them seem well positioned to guide the company. Their executive compensation, while looking high on paper, is heavily weighted towards performance-based incentives, which is a positive sign for shareholders. They also have robust corporate governance practices in place. However, while their financials show growth and profitability, their total shareholder return in 2025 lagged behind their peer group. This is something the company and its shareholders will want to watch closely. While they are doing a good job of growing profits, they need to ensure this translates into outperforming the market and their competitors in the long run. The focus on strategic initiatives and international expansion looks promising for future growth, but success in outperforming competitors is key. Alright, that is our breakdown of WD-40 company's latest proxy filing. What is your take on these numbers and what they signal for the company's future? Do you think the pay is justified given the shareholder returns? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description below. Thanks for watching. See you next time.